Hello and welcome to the Gold, Goats, and Guns podcast for August 23rd, 2024. My name is Tom Luongo, and we have a lot to talk about. It is episode 189, and I'm going to do something a little different than I normally do. I haven't done a three-way talk on this podcast for quite a while. I think the last time we did it was between myself and Dexter White and Sam Texas. It was probably 2 years ago. But today we're going to talk about gold and from a different perspective than we normally do. I've got Vince Lanci and Eric Yeung, who's one of my great Twitter mates at King Kong 9888. And we're going to chat about that for about the next hour and 15 minutes or so. So I'll be speaking again this year at the Expat Money Show put on by Mikkel Thorup from October 7th through the 11th. This is a free event. I'll be speaking twice, once by myself and once as part of a panel with Alex Craner and Bob Murphy, which was really, really cool. There will be people like Ron Paul, Doug Casey, Scott Horton, Tom Woods will be there, Mark Faber will be there. It should be an excellent show to help you learn everything you need to know about crafting a potential plan B if you need one, and if you're looking to preserve your liberty and your wealth at a time unknowable as the period of history that we're in right now. So this includes things like getting a second passport, diversifying your offshore finances, just investing in international real estate. All of these folks that will be there will be able to help you with that. So if you want to reserve your complimentary ticket, head over to expatmoneysummit.com and you can sign up there. We have a promo code, and the link will be in the show notes for this podcast. Also, I will be speaking at as the keynote speaker at the Mises Donor Summit on the weekend of October 10th, so 10th to the 12th. I'll be speaking on the 12th too, and we'll go from there. So there will be links to both of those events down below, along with promo codes for both those events if you decide to sign up, and we'll go from there. So now, with that out of the way, I'm going to introduce. Y'all know Vince. Vince has been on the podcast, half a dozen times. VBL's Gold Fix, Soren Thek on Twitter, and he is two heads of, I think, one of the best gold-related triumvirates in FinTwit, between myself, Vince, and Eric Yeung. Twitter mates now for a couple of years, and I really wanted to bring Eric in because Vince and I talk about the gold market and various things from a plumbing perspective, from a domestic perspective, or at least from a London, Chicago perspective. Eric, being on the other side of the world, sees the gold market from a different perspective. And it's why I wanted to bring him in today to have this conversation. So Eric, thank you for showing up today, guys. Let's do the thing. Let's have a nice, relaxed chat about why China is going to corner the gold market. Vince, how are you this morning?
I'm good, thank you. I think. Yeah. I'm sorry.
Okay, go ahead. No, go ahead. Just go ahead.
Is this thing on? No, I'm kidding.
Yeah, this thing's on.
I'm the Star Trek person here. I know that you two guys are the Star Wars homos, but anyway, moving on. I think seriously, it was Eric who actually introduced us formally. I was reading your stuff and what have you, but
I think when you and I met on the Twitter Spaces that Palisades Gold Radio did, and that's where we first met.
Right. Exactly. That is the first time we met, which was the start of a
And before I bring Eric in, just to remind everybody, that was one of the few moments in the last couple of years where I was fully and utterly intimidated by somebody. And then by the time we were done, it was a meeting of the minds. We're like, oh God, this is two paisans that are like peas in a pod. Eric, how are you this morning?
I'm doing good, Tom. Thank you for having me on the show. Oh, really appreciate it.
You're more than welcome. So, as I said in the outset, I want to understand what you were telling me, in prepping for this, is that we don't quite understand the way we think we understand how China and Hong Kong are buying gold and what their strategy is and whatnot. We can look at their official holdings and all that, and there's a speculation as to how much gold China actually has. But I think it would be really instructive for people to sit down and just get beyond our personas about what we present on Twitter and to really get into the guts of this. So you have some very provocative ideas about and insights, I think, as to what's actually going on inside China. So if you can just take the floor for a few minutes and try and let people know, what you're seeing in that market, that would be fantastic. So we'll just start from there.
Okay. So I think most people in the West thinks that the Chinese buying gold hand over fist, right? And they look at the pictures of what's going on in China in the videos, and they think there's a FOMO going on. That people are just taking, let's say, a majority of their liquid cash, whatever they have, to buy gold, physical gold, right? And today I'm here to tell you guys that that's simply not the case. That's not the case. We are at the very beginning of the Chinese bull market right now, gold bull market right now. Chinese people are just beginning to look at gold as an investment asset class. So that's where we are.
Okay, so why do you believe that? So if you can fill in the detail on that, why do you think that?
Well, traditionally Chinese people buy gold, right? But they only buy gold as a method of savings. So let's say they have $100,000, right? They would take a maximum up to, let's say, 10,000, and they would take that money to buy physical gold, right?
Right.
But the rest of the money, majority of that, they would be buying real estate, their home. That would be the number one investment that they put their money in, right? And then the rest of it, they would put it into paper assets like stocks, etc. Right? And I'm telling you now, Tom, that hasn't changed. It's still the same. It's just that the paper assets now, they're not really buying Chinese equities, because those things are falling like crazy, right? They're taking that money and they're buying high yield financial products, like fixed term savings deposits at the bank.
Right.
So right now they're getting something like 2% at the Chinese banks, and in Hong Kong you get around 4% for that.
Okay. So if I go back to now, just to think about this, Eric. I go back to when I studied with a guy. I started learning all this stuff when I was working with a broker over in Vietnam. I actually had a little 2-person side gig going on with a guy about 12 years ago. He's over in Vietnam, and we studied. And China was part of our clearly our study area. And one of the things that if I go back to the property bust of a decade ago, and how everybody was screaming that China was going to bust then and everything else, I said, there was all of these structured SPVs. I can't remember the structured product vehicles or something like that. People were trying to get They were trying to get their excess yield through effectively real estate leverage, if I remember correctly. Is that still a dominant theme in China? Because I know that he tried to break a lot of that, right? Yeah,
that's a very smart observation. People are still yield chasing right now. That's their number one investment. Okay, so you probably know that the Chinese real estate market is crumbling right now, right? It's falling apart, kind of, right?
Right.
Well, whatever excess cash that these people have, they are putting it in these high yield products like what you're talking about right now.
Right.
And they're waiting. They're waiting for let's say 6 months down the road when they think the Chinese property market has bottomed, and they'll jump into properties.
Right.
You see what I'm saying? So the majority of their money, they're still putting it in, like I said in the beginning, paper assets.
Right.
Like these high yield things, right? And gold is simply a small portion of their savings. So whatever you see out there, right? Like the crazy gold buying, that's just, a bit of their money, of their disposable money. That's it.
Right.
There's a lot more to go. That's what I'm trying to say.
Yeah, no, I understand that. Yeah. I'll say that if you believe that only 10%, well, they're still way ahead of the West, right, Vince? I mean, think about it. Where are we at this point? Where gold is hitting an all-time high in dollars, for example. We're sitting here around, $2,500, and Americans are still not buying gold. And so, I mean, are we agreed on that?
Yeah, I mean, I'm agreed with it. Eric is describing the U.S. 100 years ago, like ideologically, right? It's like we put 10% of our money in savings. That money is to not be touched. They're not investing in gold, to paraphrase something that Eric had said before. They're not investing in gold expecting a return. They're putting in money in gold, not expecting a loss. And these high yield paper instruments, they're the new, and correct me if I'm wrong, Eric, like high. First of all, the term high yield to an American means like a junk bond. And I think that term high yield for the East means a money market, a cash-like instrument that may be locked up for some period of time. Is that correct?
That's part of it, but a lot of it is like just they had something called it's kind of like an oil fund that they had back before oil blew up in 2020, right? So it's a structured product where you get something like 5-7% yield per year.
Oh,
and that thing blew up because oil went negative. You see what I'm saying? And now, just last year, right? I think it was last year, earlier this year. The gold structure products blew up. So they had guys, remember that? They had guys like, who ran these vaulting services all over the country in China. And they were promising people 5% yield for the gold. But, some of these guys weren't even buying the gold. They just took the people's money. You see what I'm saying? It was a Ponzi scheme,
I
right?
know exactly what you're saying.
And that thing blew up too, right? So what I'm trying to say is is that the gold thing, like you're exactly right, Vince. It's just a small part of their savings. Okay, the majority of the money that the stuff that they're putting the money into are these structured products where they're chasing high yield. They're still doing it. They're doing it with I was just talking to a guy on Twitter today, and I told him that the Chinese guys, they're buying stuff like Bank of China, like the stock, and stuff like China National Offshore Oil Corporation. That's like our Exxon Mobil, right?
China.
And China offshore oil, they are paying a 4% dividend right now, and the Bank of China is paying a 5% dividend. So in China, that's high yield, because like our sovereign bond, like the Chinese sovereign bond, right, is paying only around 2.2% for 10-year bond right now. You see what I'm saying? And if you put your money in the bank in China, you're getting around 1.5 to 2.2% in any return right now. So
and what you described there is that the structured product blow ups. Well, I guess what the first thing that popped into my head was all the ones that we're starting to see here on this side of the pond, on this side of the world, monetary metals, and people out there trying to say they can give you a 12% yield on silver, and we're like, this sounds an awful lot like DeFi in 2017, 2018. It just feels like yet another. To put it in terms of like my partner Dexter White would just call it a scam, flat out. And because honestly, 3 to 4% is really what you should be able to hope for. Anything above 3 to 4% on a sustainable basis is not. Is generally not on an ongoing basis, not necessarily sustainable. It's very, very difficult to maintain that level of arbitrage. And Vince being the arbitrage guy. Are you going to argue with me about that, Vince?
No. You know what?
You got to get above. You got to go into leverage, right?
Yeah, I'm trying to wrap my head around the culture. Meaning simplifying it, greatly simplifying it, Eric. 90% is invested, right, and 10% is saved. Simplifying it, right?
Let me just simplify for you, Vince. Okay.
Yeah.
Number one priority in Chinese culture is the house you live in.
Right.
Okay. So whatever money they're saving, they want to eventually put that money into their house.
Right.
You see what I'm saying? But right now, the property market is plummeting, right? So a lot of these people are just waiting on the sidelines. You understand what I'm saying? So they have more cash than they normally would have, right, in the past. Because normally they would have already jumped into the property market. Get it?
Right.
Like both feet in, right? Now they are on the sidelines, and they put all this money into these structured products and the two stocks I talked about, right? And they're more than these two stocks. There are other state-owned, companies in China that are paying high yield, right? Around 4 or 5%. You see what I'm saying? So that's right now their number one priority right now. Put money into that, right? They're putting money into those things, right? Gold is simply something that they buy and forget.
Right.
So people there are guys on Twitter. They always say to me, they say, well, why are these Chinese guys buying gold from a jewelry store? right? Like in China. Because from the jewelry stores, you pay around like, 18 to 25% premium. Okay? That's what they pay. In Hong Kong, they pay 16, but in China, it's around 18 to 25, right?
Right.
Why would these people do that? Well, the reason is because they buy it and then they forget it. They're not selling that gold jewelry like next month. Do you see what I'm saying? It's a long-term thing. They're not expecting gold. I mean, they're not expecting gold to double in a year.
Right.
I mean,
marketers and fearmongers are showing that as a panic when in fact it's really just standard operating procedure for how any culture that values gold.
That's exactly it.
Right.
They're buying it every month. They're buying it every month. They're not stopping, right? Because if those guys, are correct on Twitter, if there was FOMO, all gold buying would have stopped, right? At once gold made a peak and dumped, right? But it didn't. At every price level, these Chinese guys are buying. Right. And it's because exactly what I told you, right? They're buying it with only a small portion of their savings. That's why, right?
And they're going to continue to do so into a falling property market because they're not sure where they're going to get yield beyond their 3 or 4% or 4 to 5% in equities, and they're going to hedge their bets clearly with companies that are I'm going to say friends of Xi, as opposed to not friends of Xi. Well, that'd be fair. So
the you made 2 points there, right? And they're both valid. Sure. What you said about like the state-owned companies, right? I think Vince actually talked about that before, which is China wants to push some of these people into into Chinese companies, so that these Chinese companies remain strong, right? Yeah, that's why the state-owned Chinese companies have higher yield than the sovereign bond, right? You see what I'm saying? There's a 2% arbitrage, right?
Right.
So that's part one. And then part two is, we are getting into a rate cutting cycle, right? So all these yields, they're going to get slashed. So what happens? Gold becomes even more attractive in that environment, right? So more people, what I see is that first of all, their allocation into gold in terms of percentage of their wealth will get higher as we move forward, okay? And then number two is as the rate of change of gold, the gold price, get higher, if gold go up faster, right? More Chinese people will look at gold as an avenue for investment.
Yeah.
Which is what they're not doing right now.
Especially in contrast to the structured products, which will be either collapsing or decreasing in yield.
Yeah. So the structured products are basically like a lot of the times, if they manage to pay you the yield and they don't collapse, well, all is fine, right? The ones we hear about are the ones that blows up. You see what I'm saying? Right? That Go ahead.
Well, what I was going to say, Eric, is that, and then there's a geopolitical angle to this as well, right? Clearly, the first thing I think of is in this, because Vince and I talked about this many times, which is that, it's to China's advantage. It's to China's advantage geopolitically to keep putting upward pressure on gold, and either because it's going to further put pressure on the existing monetary system and the pricing regime that we have in the West. So, this is it. What you just described to me is kind of the perfect storm between you've got the government of China, can be buying gold when it's suppressed in price to support the price, and then as the price starts to move higher, it then makes it more attractive for Chinese people. And we've got the West coming and going, where we stair step the price of gold higher. And then I guess what you're really arguing here is that there's going to be a tipping point where we're going to get an acceleration of Chinese public gold buying, public and private gold buying.
I'll tell you what it says.
And then that's going to be even worse for the price, the price suppressors in the West. Let's just put it that way.
Yeah, and I'll tell you what the price level is, right? $3,000 US per troy ounce. And also it depends on the momentum of how fast that gold price is going up, right? Because that's what Chinese people look at, big numbers, big round numbers, okay?
No.
Once it crosses $3,000 per troy ounce, and if the momentum is there, you will see a lot of Chinese people start looking at physical gold as an investment instead of just a saving. You see what I'm saying?
No, I get that. We have the same problem here. Jim Sinclair used to call it the round number syndrome. Like every $100, that's where the price suppressors, that's where the big bullion banks and the LBMA and all those guys, they would set up on the $100 because those are psychologically important levels, even though they may technically be completely and utterly irrelevant. You get into $3,000, it's going to be it should be a different regime. Vince, what do you think about all that?
I think the interesting thing about it melds with some things that I have seen, but at the micro level first, what Eric is saying, it would seem that the money they put into gold now is store of value. The other money they put into other things for growth. Now they may have changed. It used to be primarily housing and stocks. Now it's moved into higher yield stocks and structured products. And serially, as bubbles collapse or markets break, like housing broke. For example, in the U.S., we used to have MLPs were a product like that, where you would take the cash flow generated from an oil pipeline or a natural gas pipeline, and you would throw the dividend off. And when those, everyone put their money in those in the U.S. And then those collapsed. There were also tax problems, and as a result, they moved their money somewhere else. Whereas in China, the flow would be to another structured product or another hot asset class. The problem is if we're in a global rate decline, and if the price of gold cracks 3,000, and simultaneously gold will attract interest, will become a hot investment product, not just a store of value product. And it will also happen at a time where these structured products that are dividend or cash flow or interest rate sensitive will decrease in value, if not collapse. So I get it. Like all those people buying gold right now in China, they're not hoping it'll go up. They're just hoping it won't go down. They haven't even bought it as an investment yet.
Yes, exactly.
There's one other thing I want to touch on. It's kind of secular, but I think it'll bring it home to the whole. If you don't mind, Tom.
Sure. Take your time.
Like Tom and I talk about this a lot across nations, and I think we would agree on this conceptually. Well-run nations, and I'm going to put China in this category for this topic. Well-run nations tend to ring fence and protect their domestic investors. That doesn't mean they make the money. It doesn't mean they don't fleece them. What it means is they want them to put their money in things that in the long run will help the country, the government, the people in power, right? And when you run into a culture that's having a hard time listening to you, like India is an example of that, you end up having to do what the people want. And for example, in the U.S., the people wanted gold, in the 70s and 80s. And so they did that. And then once that money was kept in the U.S. by putting it into gold or gold instruments, then the government changed the rules to force them to cajole or manipulate us into stocks. And what I'm getting at is if you bring that to China, China is unique in that not only does it want to direct its domestic investment money to stay domestic, right? It needs it to do that because it's systematically rejecting overseas investment. So our money is not welcome there anymore because of all the strings that get attached with it, and they prefer to have a more protected economy. Simultaneously, Chinese people having been burned by the overbuilding in real estate, they're looking for something that's going to protect them. So China's like, okay, you guys want gold? Fine, we'll buy gold too. And it's like they make their citizenry winners. They build trust and they build nationalism. And then eventually, and they're doing this part, they're coming to this part right now a little bit, eventually, when everybody's thrown their money into government bonds, and government bonds in China are 2% yield, whatever they are. And gold has appreciated because government bond yields are lower in China. Eventually, they then steer the money out of government bonds, which they're in the process of doing right now, and then they direct it into whatever they want next. And that would be stocks, but it would also probably end up being gold, whether they like it or not. Did they or did they not just send out new allocations from the government to the purchasers at the bank level for gold? I mean, are they not preparing for another upswing in gold demand and a downswing in bond values, Eric?
Well, like me and you both read the same thing, right? From the guy who shall not be named, right? Like who wrote the article about Chinese government buying gold. So I think it's still ongoing on a per month basis, like 50 tons. Am I correct?
Yeah, you are.
Yeah, per month. So so I think it's still going on. I don't think it has stopped at all. And like I said, I think consumers in China are buying gold, on a monthly basis with their spare cash, right? But I just want to add one thing. The 3,000 price point is just one part of it. The other part is that the gold price appreciation has to be sustainable beyond 3,000. You see what I'm saying? I mean, like for the Chinese to change their habit, switching from gold as a savings to an investment, right? Make sense? Like if it goes to 3,000, it gets snapped right back down to 2,500. I mean, people are going to be gun shy, treating gold as an investment category, right? So I think, $3,000 is part of it. And the other part of it is that, the gold price appreciation beyond $3,000 has to be sustainable for, I don't know, 6 months at least.
I would agree with you on that, Eric. What I'll also say is that one of the things that I think about this, the minute you start talking about this and you brought that up, the first thing that popped into my head was relative volatility. Like if you look across major asset classes at this point, now you got to start asking yourself, well, what's the least volatile asset? So this is why slams in gold are so they're done to increase gold's perceived volatility. But I've been tracking this. I've been talking to Vince about this. We were joking before we hit record that one of the things I've been complaining about is that I want to go out and make Donald Trump has MAGA. I want Moya, make oil investable again. Or the oil market has become completely and utterly uninvestable because weekly, and I mean weekly, volatility in oil as a percentage of price, the range as a percentage of price is like 7%. Oil moves 7% of its 7 to 8% of its value every week on a 5-year rolling basis. This is what I this is one of the things I calculate. Gold, by the way, is less than 2%. Silver is around 4%. Start looking at the relative volatility in stocks. This is part of the reason why we run vol suppression on equity markets in order to keep the volatility on these asset classes low in order to keep people thinking, people aren't sophisticated investors. Most people aren't sophisticated about this stuff. They just want to know first they want to know they're not going to lose money. As you
volatility is instability to an investor.
Right. And it makes them gun shy. And so what we're in a period of time here where in order for the governments in the West to roll out these ridiculous and ruinous policies that we're all complaining about, they had to cap the price of oil after Russia invaded Ukraine. In order to, the neocons wanted to do it to starve Russia of money, blah, 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 blah. Everybody had their reason for doing so. But the main reason, the volatility in oil under that scenario is telling you that the market doesn't really want those prices, that oil is fundamentally mispriced because the in oil has literally tripled in the last 3 years. It used to be 2-3%. Now it's 7%. Okay. And so what I'm getting at here is that the conditions are ripe for everything that Eric is saying for this shift in perception by Chinese, like unsophisticated Chinese investors to just go, you know what? Even if gold gets slammed a little bit, it's still less volatile than all these other asset classes, especially if they're managing the currency, if they're managing the currencies as well, like the exchange rate as well. So that's also an interesting angle on all of this. Just to kind of put a cap on all of this, is that I think that this is a kind of a perfect storm. And again, it goes back to my point originally. The Chinese government understands this, which is why they're in the market putting a bid under the price of gold, so that every time there's a liquidity event overseas in the Americas, we don't see the $200 washouts that we used to get in gold. Like, for example, August 5th, the yen carry trade unwind. Everybody was losing their minds. We call it Black Monday. Normally, under those circumstances, I was expecting gold to get hit for $200, and it got hit for 40.
Yep, that's
a different regime, guys. That's a completely different market.
Yeah, let me add to that, because what you and Eric said in conjunction, stability, volatility. Gold in the past had a higher volatility than bonds, as it should, because it's perceived globally as more speculative. And that volatility was created by speculative funds who bought it, FOMO, and then bullion banks who sold it. And because the bullion banks had deeper pockets, gold would go down and down and down. So there was no fundamentalist buying underneath. Enter China over the last 2 years and the other BRICS. And what you have is someone who's willing to catch the falling knife. So two things happen comparing gold to, say, oil. Over the last 10 years, oil had a lower volatility, but a higher upside volatility, whereas gold had a higher volatility and it was all downside, right? We had washouts. We had, Mr. Slammy, as we all joke about.
As Eric coined it. Remember, folks, Eric coined the phrase Mr. Slammy.
Eric coined it. As soon as he coined it, Mr. Slammy died. So we're waiting for him to be reborn. No, I'm kidding. But the thing is, so the beauty of it is, once China came in as a bidder, you had the bullion banks slamming, right? That's what they do. And you had China catching knives, and China and other BRICS partners. And so what that did was that lowered gold's volatility overall and created a trend higher to a more sustainable price, thinking about Eric's word. So gold's volatility is dropping while its direction is rising, which makes it a sustainable asset, which also makes it suck all the money that used to go into gold. Into oil is going into gold now at the macro speculative fund level. Anyway, I guess the point is, when you look at gold as a volatile asset compared to, just putting a punctuation point on an exclamation point on what Tom said, gold's volatility is now lower than bond market's volatility. That's not supposed to happen.
Dude, we see the U.S. Treasury market move 14 basis points for nothing.
It's a penny stock.
5,000 job miss on the friggin' continuing the unemployment claims. Are we kidding? Like,
biggest bond market in the world.
Points?
Biggest bond market in the world, Tom.
Yeah, these are the two most important assets in the world: the the long end of the U.S. Treasury market, and oil, which should be the most stable and least volatile, and they become the most volatile.
Right. That's right.
They've become more volatile than Bitcoin. Outside of Germany and the United States selling off, thousands of Bitcoin indiscriminately, like we've seen. They've seen
Bitcoin is the new gold.
Is now, Bitcoin's the new gold in that respect.
Right. And gold's the new oil, and oil is shit. I don't know what oil is, but it's not doing well right now.
What oil is right now is the playthings of globalists over in Europe that are desperate to keep the price of it low in their currency terms in order to make and raise the cost of using it on everybody else regulatorily. This is the model that's been in place now for a long, long time. So, so I want to shift gears here, because I think, and part of, again, Eric, so you guys know, Eric gave us an outline on this of what he wanted to talk about this morning, and I absolutely want to make sure that we get to those the points, because I think it's a good structure for the podcast. And you all know that I'm not really good at doing structured podcasts, so we're gonna just handle this in mostly a ham-fisted manner, because I can't do this organically. But one of the things I note is I wanted Eric to talk about what he's seeing over in Hong Kong as well. That we've got that there's not just China, which I think we've covered really well, but then Hong Kong being the gateway in many ways for Chinese, in many ways Chinese monetary policy. What's going on in the Hong Kong market, and how is that? And how is that? How is that interesting?
Well, before we get to that, Tom, let me ask you a question. Let me ask you a question. Mm-hmm. How much do you think Chinese workers get paid on average back in 2010? Take a guess.
I can't remember those numbers. Okay. I'd say less than $1,000 $1,000 a month, $500 a month.
$1,000 RMB. Yeah, RMB, not US. Like Chinese yuan, right? Around 150 to 300 US back in 2010, 2011, depending on the position that you're at, right? Like which the company, etc. Right? But now it's around 600. You see what I'm saying? Around 4,000 RMB, about around 600 to 1,400 US for like an average worker. Like the 1,400 is on the high end, right? You're talking about like big international companies, probably an office job, right? But you see like how like wages went up like 4 times in the last 10 years, right? And guess what? Like there was FOMO in gold buying in China back in 2011. Like, I mean, you walk into a gold jewelry store back then, or like gold bullion, whatever, right?
Sure.
They didn't have any product to sell you. They tell you to come back. Like you leave your name, phone number, and maybe a deposit, and they come back in a couple of months to pick up the gold.
Wow.
You see what I'm saying?
So I didn't remember that. But
now you're
it's interesting because you're triggering all the stuff that I studied between 2011 and 2013 is when I was working with the guy over in Vietnam, and I remember like studying this from a Vietnamese perspective, where at that point in time, Vietnam was a 3-currency country. You had the dong, which was nothing, which people used to buy coffee with. You had the dollar, which is what people used for like investment. For making loans and business loans and whatnot. And then you had gold for all the really important transactions. And it was during that period of time, the State Bank of Vietnam put the kibosh on gold and basically nationalized the entire gold trade because it was impeding their ability to prosecute, to implement monetary policy in every way. And then once they did that, then Vietnam became the first major economy to really start using Bitcoin on a regular basis as well. Like Bitcoin was being used then in coffee shops, and small businesses were moving into Bitcoin. And they had the same problem. They had the same problem that we've heard about with China. And maybe you can speak to this a little bit because I know a little bit about this, just a little bit.
Yeah,
but okay, go ahead, Eric.
Yeah, my whole point is that we haven't seen FOMO yet. That was FOMO.
Right, I guess.
That was FOMO. Like when you walk into a store and they don't have no product to sell you, right? You got to wait 6 months. That's FOMO. That was FOMO. Yeah. We don't have FOMO now, right? And back then, people were getting paid a quarter of what they're getting paid now in terms of like salary, right? And they had over 10 years of savings during that period. So what I'm saying, and I've been saying on Twitter, like we got a lot of runway for this to get to the FOMO stage. So because a lot of people, your followers, my followers, Vince's followers, they're saying, oh, China is already at the FOMO stage for gold buying. They used all their money to buy gold already. It's game over. It's not. It's just we're just so like we're in the beginning of this. That's my point. They don't even consider it as a investment category right now, right? You get it?
No, absolutely, I get it because you look at the gold price and tell you there's no FOMO in the gold market. Like the period you're talking about is between 2009 and 2011 when the gold price tripled.
Yeah, exactly.
It tripled off a 681 bottom into 1911 in the US. And correct me if I'm wrong, but the yuan was trading around 6.25 back then. Now it's trading at 7.15. Like this, relatively speaking, that we haven't seen wages quadruple and the currency quarter. Right, we haven't seen the yuan, the offshore yuan, go to 25. Right, and so there's been no net wage gain. That would undergird the arguments of the people who are saying that China has already shot their wad. No, you're completely correct. The Chinese people are richer today than they were then. They're making more money than they were then, relative to even a gold price that is on average 70% higher than it was before, but they're making 400 times the amount of money, or four times the amount of money. So their wages went up by 400%. Gold has gone up by 70%. The government is in there supporting the bid to keep volatility low. And, as the Brits would put it, Bob's your uncle. Like, this is not a hard investment thesis.
Yeah. Right. So, that's my whole point. Like, it just started. The gold investment thesis in China just started. Mm-hmm. And you want to talk about Hong Kong a bit? Like, I got an interesting story about Hong Kong.
But before we go to Hong Kong, there's one of the things I wanted to bring up here, which was that because everybody, when you talk China, everybody wants to talk the property collapse and all this other stuff. One of the things that people, I don't think, understand about Asia in general is that and correct me if this has changed, but when I studied this 10 years ago, one of the problems we ran into in trying to understand Vietnamese companies was that the banks won't lend against cash flow; they only lend against hard assets.
Yes,
so you
correct.
Is that still in place today?
Mostly in Hong Kong, they lend against property. So if you have like a property, you can lend against that. Yeah.
Okay. So this is why you would see a lot of non-core assets. Like I studied, we had a contract like looking at Vietnamese microcaps, like $2-3 million furniture companies, for example, and for them to expand their business, every time they had to go out and buy like a rice field or a hotel or a hospital in order to be able to lend against the equity in that property. Because in order to expand their furniture business, because they couldn't get a loan against their cash flow.
Right. And that's what we talked about last time. Now I remember.
Yeah, we've talked about this. Vince and I have talked about this before, and I want to just get Eric's perspective on this, is to make sure that, if this has not changed about Asian finance, this is part of the reason why there's always these booms and busts in the property markets, in order to, whenever there's a big economic expansion, So I don't know if you want to add to that in any way. I'd love to hear it.
Yeah, that's a very good point right there, Tom. Because right now, what's happening in Hong Kong is that, like, a lot of banks, they are writing down these collaterals. Because they're collapsing, right? Like the property market, right? So a lot of these banks are actually considering. They haven't done it yet. Some of them have started, I guess, right, to call loans on those on those loans that are loaned out against the property as the collateral. Like exactly what you said, right? So that thing is deleveraging. It's going to start deleveraging, right? I was just talking to my banker today, and he said that it's possible that banks are going to start taking physical gold as collateral. See how interesting that is? Because your gold is not going to collapse, right? Like the problem with property is that you can repossess it and sell it, but there can be no buyers. You see what I'm saying?
Yeah, we have the same problem. We're having the same problem here in the commercial real estate market and hot markets all over the United States.
But gold is liquid, right? Somebody's going to buy the gold. You see what I'm saying? So, I think it's happening because it's going to happen. Because that person wouldn't have told me this unless it is going to happen. Make sense?
Right.
I think it's probably going to happen. Makes sense, right? With the whole BRICS thing coming up, right? They're going to make gold gold is already a tier 1 asset with the BIS, right? So why not make it a commercial collateral for businesses? It's going to happen.
And let's move it one step further. So now I have a big question. This is the first thing that popped into my head, and I'm going to throw this question open to both of you. What does that do to the Hong Kong dollar peg?
Well, you want me to answer that question? I think the peg is going to be there until China doesn't need Hong Kong as a buffer zone to deal with the West. Hong Kong's sole existence is to be there as a buffer zone for China to deal with the West, with the US, with Europe. You see what I'm saying? The day that China doesn't need that, Hong Kong, you don't need the Hong Kong dollar, you don't need Hong Kong as a special administrative region, right? It can merge with the Canton province, right? Guangdong province. It can be what they call the Greater Bay Area, right? With Shenzhen and Zhuhai. You see what I'm saying?
Yes.
Yeah. That's my view.
Vince?
Yeah, I don't have a strong opinion on that because that's not. I can only just rephrase what Eric said. I don't know that. Like, I don't know, and I mean, I don't know. Like, I don't know what China's policy would be towards Hong Kong when it outlived its usefulness. But I do view it as a conduit, a tunnel, a transitioner, a way to let outside stuff in without letting inside stuff out. So I mean, it's kind of like the what they've done with Shanghai, right? Special zones, but it's not creating its own currency. I don't know what happens, but I do know that with regards to gold, if the BRICS currency or whatever it's going to be, a unit, an Enbridge product, what have you, is going to be 40% gold, which it very well could be. And other currencies are going to be the other aspects of it, the other, let's say 60%, simplifying it, keeping silver out of it for the moment. Then those other currencies are going to want to peg themselves to gold, or at least tie themselves to gold. Why? Mm-hmm. Because they must fight amongst each other for the 60% of the currency that goes into the basket. So the more gold you have in your country, the more strong you are as a participant in the basket. Now, bringing this to the whole gold as collateral in China domestically, shit, if I was running China and I knew 40% of the basket would be gold, and I knew that I was in the process of buying enough gold to get myself off the dollar in every way, shape, and form as a currency, and both as a store of value asset manifesting from treasuries, then I would also encourage my people, as China has done. China, the CCP really wants to, in my opinion, encourage trust from its people. It's a nation that hasn't really known stability for a long time. They're not unfamiliar with revolution. And so if gold's going to be in the basket and they're telling people to buy gold, and other currencies are going to be tying themselves to gold in some way, it completely makes sense. What Eric is saying is that, you know what? Shit, we have gold locally. All the gold that checks into the country doesn't check out. And the world still values gold outside of us. If we ever need to exit it, why not make gold the new collateral, which is what Tom and Eric were saying. So I think that's these are more bricks in a wall that China is building to support the yuan or renminbi, however you look at it, when it goes off the dollar link. Anyway, I just wanted to throw that in.
And I think to add a little bit to that, to say, and at this point, China doesn't really care about internationalizing its bond market per se. That will take care of itself as a function of trade flows. Like by internationalizing the yuan across the rest of the BRIC space, you're going to have forex, reserves building up in yuan around the world, and that's going to organically grow the Chinese government bond market, and they don't have to entice domestic buyers to do that.
I totally agree with that.
Yeah,
I totally agree with that. If you're a country,
this is right, and this is exactly how they're going to be able to expand the monetary supply of yuan to fit the expansion of the domestic economy, without having to incur the quote unquote inflation along with it.
Which is what we did. The US did,
Exactly. That's exactly what we did.
Exactly. Which is what we had talked about in the past in another podcast and on Twitter. And that was China is making dollar loans to Latin American countries and saying, you know what? You don't have to pay us back the dollars. Pay us back in yuan, and we'll give you business in yuan. Now, imagine 2 years from now, the Latin American country is like, shit, I have a boatload of yuan sitting here. What am I going to buy with it?
Make it 3%.
We have some bonds. 3%. You can buy those, and so there you go.
Well, if I remember correctly, go back to, I have to go through the Twitter feed. It was Eric that actually, it wasn't Eric that pointed it out, that it was, if I remember correctly, that it was, that's exactly what was going on, that these loans were being made in dollars and being paid back in yuan. Eric, am I correct about that?
Yeah, that was a year ago, I guess. I was talking to my buddy. Yeah, it was almost a year ago. Yeah.
Oh, just to give you an idea, dude, we stole your thunder and we did an entire podcast based on, I think, on that exact tweet.
Oh yeah, I heard it. It was good. It was great.
We mentioned you, Eric. We mentioned.
Yeah, you did. You did. Remember?
We mentioned you.
You got
sure.
this. Thank
Again,
you.
this is why I wanted to get Eric on the show, because I mean, a lot of these, I guess, again, when you have someone who's intimately involved in that market in this way on that side of the world in that market, it's fundamentally different than being an observer 12,000 miles away. It really is. So, okay. So we've talked about gold. We've talked a little bit about Hong Kong. So now the bigger question, I guess, is this. Let's talk about silver, because this is now we got to at least make Vince happy here. We got to talk about silver a little bit.
Fuck you guys.
So you want to ask me about silver, about China and silver?
So what do you think is going on? What do you think is going on with silver and all that? Let's just I'm just throwing it open.
Okay, it's pretty simple, right? I mean, Vince knows this. We have a common acquaintance called Oriental Ghost on Twitter, right? And he pointed out that most silver that is bought up in China are bought up by this one company, right? Forgot the name, but it's one company. Basically, most of the silver that are being bought up in China are being bought up for industrial usage. Okay? Retail investors or just retail buyers in general, they don't even make a dent. They haven't started buying silver yet. So that's where we're at right now. Okay?
I think
so
it's the
all
same
this
thing here.
silver.
Yeah.
Okay. I don't know about the US, but like in China, the small guys haven't started buying silver yet, right? But I tell you what, Tom, once gold get past $3,000 and it keeps going, right? Just like anywhere, the Chinese will start looking at silver. Once gold start getting too expensive.
Right.
You see what I'm saying?
The value players will start looking at silver and say, you know what, it's kind of cheap relative to gold.
Well, this ties it directly into Vince's arguments about how the guys in the U.S. trade the gold silver ratio. The Vince has described many times. I've heard Vince describe many times in the past. They just trade the gold silver ratio, and they wake up one morning. And that's part of who Mr. Slammy is. That's part of Mr. Slammy. So I mean, Vince, just to make sure that everybody understands what I'm talking about, go ahead and explain what's going on there, so we can.
The comments that I make publicly most frequently are silver's preciousness is used to keep gold in place. So if gold is a deep liquid market and silver is a thin market with lighter volumes, silver is easier to bully around for moments, not for months or years. Well, technically probably for years. So if you're looking at both of the prices on the board, you don't recognize that silver is really kind of a future. As a futures market goes, it's kind of broken, but gold is pretty robust. Anybody who wants the price of gold lower can sell silver and make gold go lower. Now, does it make people sell gold? No, but it makes buyers go like this. Oh, they're selling silver. I'll be more patient, and they lower their bids. Now, I'm giving you a story, an analogy, but it's based on trading and truth. And once I started to realize this years ago, once I started to see it and spoke with traders at funds and on desks, and I actually started to trade it that way, I asked myself why, right? And here's a bottom reason why they do that, forgetting about tinfoil hats and conspiracies. On the COMEX, gold and silver trade with a partial cross margining. So if you're putting up $10,000 to buy gold and you can sell silver, that reduces your gold margin. It partially offsets it. So it greatly increases your rate of return. Now, if I'm a hedge fund, right, and I look at gold and I like gold and I'm long gold, I might sell silver against it. So there are many ways to keep the gold silver relationship dynamic, or put it this way, manipulated. That's ending, however, not ending overnight, but it's ending, however, because as to Eric's point, as the price of gold goes up, the macro discretionary big deep pocketed funds that are playing gold that used to play oil, right? Because oil's broken right now. Just to tip my hat to Tom's points about that. Those big boys are going, well, geez, I'm up $300 in gold in a month. Silver looks kind of cheap. I'll throw some money in silver. And so it's getting harder for players who want gold to drop, who like to sell silver, to paint gold as bearish, to do so when you've got other buyers. Now, on top of that, the industrial side that Eric talked about, in China, a lot of the buying is industrial, solar, what have you. That's the story, and it's a good story, and it's correct. In the U.S., and this is coming from Franklin Coins. This is from Andy Sheckman. I'm sorry, I'm having a brain fart. I was listening to him and talking to him and talking to Chris Marcus and talking to another mutual on Twitter, and it's become apparent. Again, we're talking about silver here, that silver industrial demand is now sucking investment coins from the U.S.
Yep.
So there aren't, number one, to Eric's point, there really is no investing, and your point, Tom, there really is no investing in silver coins outside of the 5 stackers that we all, show our shiny stuff to. Number two, there really is a prolonged shortfall in production globally, as barely mentioned by the Silver Institute, as heavily noticed by the 3 of us here, as well as our friend Bai, and research by me and several others. There's just not enough production to cover the demand. And number 3 or number 4, I don't even know what number I'm on now. The shortage of production is being offset by cannibalized above ground silver investment. So yes. I need silver for solar. There isn't any left. China. Well, shit, let's go to Latin America and buy raw silver. China. Shit, let's tell our own smelters to process their zinc more aggressively to pull the silver out. In the U.S., what is it? Well, industrial demand is now going, people are literally going to coin dealers and saying, we're going to take whatever you don't want to, whatever you can't sell at spot, and we'll give you some liquidity, and they're using it industrially. That's the information I've gotten. So the point is, silver isn't even being looked at as an investment vehicle, and is still being cannibalized as an industrial asset. So there you have it.
So can you imagine? Like when the entire world start buying silver, like Chinese included? Like I'm talking about retail guys. Can you imagine what will happen?
Yeah, it'd be a disaster because the future market
would be crazy. Yeah.
Well, simply put, it's the same problem that we have with this whole AI revolution.
Yeah.
And everybody running all this money into AI, forgetting that you're going to need electricity generation and silver. You're going to need both of those things in order to have the AI revolution, to have any of these things. Like right. These are assets that you just need in order to do the end product thing. Well, again, if to Vince's point, if there's that much industrial demand that they're cannibalizing, stackers, like our monster boxes of green tubes, right, of silver coins in order to be able to build solar panels or chips or whatever it is, or keyboards. Right. That's where we are in this cycle. And now we've got the latest the latest thing from Samsung about the big battery, the new
solid state batteries. Yeah.
I
mean, that's a big deal.
This stuff is real, and I'm gonna make it abundantly clear. And if you don't think that the big boys don't understand this, which is why they keep vol washing all the small specks out of oil and silver and the treasury market and every other fucking market, in order to be able to buy up the friggin' market share and be able to control the price, you're out of your fucking mind. We're at the hour mark, so I start going to free floating hostility. It's clear where this thing is, like everything else. No one wants to buy this stuff at the premium price. They all want to get it at the cheapest price they can. They're not dumb. Right. And if you control the market, if you control the interstitial market, in this case the futures market, it's not a hard argument. So watching, gold and silver, we have all these different things. You have people playing the gold to silver ratio. But the fundamentals underneath the silver market from an industrial demand perspective are so strong. And then you add in what little precious metals or preciousness is left or what I like to call monetary characters left in the silver market, because it's still there psychologically. Then yeah, this is setting up for a very, very, very interesting couple of years. And once the silver to gold ratio collapses to a certain point, that's actually the thing that will touch off the situation that Eric's been like the case that Eric's been making for this entire podcast, which is that once silver gets expensive relative to gold, then people rotate out of silver and back into gold. Like it's the same trade in reverse. So
That's right. It'll be self-feeding. You know, just to it's not going to happen tomorrow, but you know, the silver is the most hated metal on earth as an investment because gold is precious and copper is industrial. And investors, especially Westerners, like these pinpoint solutions. I want, you know, a specific narrow solution. And that's what Wall Street sells. Oh, you worried about inflation? Buy gold. Oh, you want to participate in the economy? Buy copper. Well, what's silver? Silver is neither. It's not a good product to sell because you can't really sell a product that does both. It's hard to sell it, which is why when this happens, maybe it's when gold goes to 3,000, silver becomes Goldilocks. It's both industrial and it's precious. Or, you know, reminding me of the SNL skit. You know, it's a floor wax. It's a floor polish.
Oh, yeah. No, it's the old Brown 25. Yes, Brown 25. It's from the Groove Tube. Actually, it's a floor wax. It's a dessert. It's all of those things. It's the new miracle product from the Uranus Corporation. Go look up a very obscure the original anthology skit movie, The Groove Tube, which then there was Kentucky Fried Movie.
SNL got it from that.
It starts with The Groove Tube. Yeah.
No shit, I didn't know that.
That's
well, those of you that are even, like those of you that are as obtuse as me, but even less like mysterious as Tom, look up New Shimmer, right? Where Dan Aykroyd goes, it's both, and that's basically the skit right there.
Exactly.
Silver is New Shimmer.
So we're talking about all this as you guys have been talking, and as we've been doing this because we're doing this early morning here on a Friday in our time. So we're doing this between 9 and 10 o'clock our time. Gold is going to end the week. Looks like it's near an all-time high.
Wow.
Silver is going to pushing towards 29.80 an ounce. Oil is up a couple of bucks. The dollar has stabilized. And so this is a very interesting moment in time. There's an inflation trade that's occurring here on two Fridays in a row now. And last week,
Powell started speaking at 10. He might have triggered this today.
Did he? No, it was happening before that. Did Powell start speaking at 10? Okay. So
no, but I'm saying it was up, but
right,
anticipating a dovish speech. So he must be being even more dovish. You know what I mean?
Apparently, Powell came out. I'm just looking at Zero Hedge. Here's the top story at Zero Hedge. Powell pivot is complete. Oh, yeah. After 3 years, it's fucking complete. Screw you, Zero Hedge. Gold stocks, Bitcoins, bonds surge as Chair Powell says time has come for policy to adjust. Now, the question that everybody's mind is that going to be 25 basis points or is it going to be 50? Right. And that's the big question.
Yep.
Okay.
So.
Well,
what do you think, Eric?
I tell you guys what, okay? Like, you know, this whole silver thing, China, right? Mm-hmm. Once silver passes $50 a troy ounce and it's sustainable above 50, right? Chinese are going to start investing in silver. It's simply too cheap right now. You know, when I talk about silver to Chinese people, the most common reaction is like, they tell me, is what? Below $30? Are you kidding? It was 50 in 1980.
Right.
What are you talking about?
Right.
That's the reaction that I get when I talk about silver to Chinese people.
Very much like a macro fund.
Cheap. Yeah. Another thing is if you buy physical silver and you're like a small investor, right? The cost of carry is too much, right? It's so freaking cheap, and you got to find a place to store it and secure it. Are you kidding? You see what I mean?
Oh yeah.
You know, it got to go beyond $50 for, you know, and then gold needs to go a lot higher so that people will say, well, this is a really good deal, and now, you know, it's about 50. It's gold time with silver.
Yeah, no, I agree with that sentiment completely. Silver needs a new all-time high in order, and that. But the markets are telling you that the gold to silver ratio is telling you that has to happen. Like again, and so at a certain point, we start getting back into the things that Vince and I have talked about previously, which is these metals, both of them, are way too strategic to across multiple idioms, be it industrial on silver's hand on the one hand and gold on the other, that we're going to see metals not moving across political borders anymore. That, to Vince's point, that the return of mercantilism is here and happening, and we're sitting in this moment. And if it wasn't for I'll be honest with you, if it wasn't for the presidential election in 2 months or 3 months, or 2.5 months, this would have already happened, I think.
Right.
So it's going to be a very interesting thing to see what happens after the election, because I think everybody is desperate to try and hold all of this in a current pricing regime between now and then. And you can see it across all these, you can see it through all of these assets we've talked about today. So yeah, no, these are very good points all the way around, guys. I very, very impressive. Okay. Is there anything, let's throw it open one last time. So, let's just do the thing. I think 25 basis points next month from Powell, not 50. I think the market is going to desperately try and get him to go 50, and I think he's not going to do it. What do you guys think?
25. That's what I think.
No,
absolutely. 25. Yep.
Whatever the market expects, it'll be less. That's what I think. So maybe 25. The market's going to think 50, it'll be 25. Maybe the market thinks, 75, it'll be 50. I just think
the Fed futures is now up to 30% for a 75 basis point cut.
Yeah,
I just checked it. 30%
the higher stocks
chance
go, the less he's going to cut.
Yeah, I know. And again, this gets back into Janet Yellen. It gets back into Lagarde. It gets back into all this stuff.
Right.
Let's see what happens. I haven't updated the TIC report for August yet. Let's see what that looks like.
Right.
For the June, let's see what the June numbers look like. All right. I think that's a wrap, folks. It was really good to finally get a chance to sit down and chat with Eric for the first time, other than on Twitter, which is not really chatting with people. Vince and I do this all the time. Eric, I really appreciate you coming in and give us your thoughts on this. And we'll do this. We'll absolutely do this again, especially if there's ever a moment where we can, where there's a moment like this, or a discontinuous moment like this, where where it matters. So we'll do this again in a couple of months.
Yeah.
Absolutely.
Yeah. This was fun. I appreciate it. I also wrote down, Tom, a term I think that's worth remembering: vol washing. Vol washing. Yeah, you said that, right? Which is like spoofing lower, which is like Mr. Tsunami. But vol washing is a great term, and I'm going to buy the .com and screw you.
Okay, anyway. That's fine. Yeah, you're only allowed to buy the .cc, the .com, but that one's mine.
Exactly. Right. All right, guys. So for Eric and Vince, you guys, as always, you follow us on Twitter, do the thing, and we'll talk again soon, guys. I really do appreciate it, and have a great weekend.
Thank you.
Good
you
stuff.
too. Thank you. Bye-bye.
Well, that'll about wrap it up for episode 189 of the Gold, Goats, and Guns podcast. I want to thank Eric and Vince for a lively discussion. Really enjoyed that. I hope you guys did as well. And love to hear a little feedback on my ability to handle a three-way roundtable discussion. I haven't done it very many times. It's a lot harder than it looks and it sounds like, folks. So with that said, I appreciate everybody tuning in. And as always, you can follow my work over at my blog at tomluongo.me. You can follow me on Twitter at TFL1728. And you can sign up on the Patreon at Patreon/Gold, Goats, and Guns, where you can get either or both the twice weekly market reports and any private podcasts and private blog posts I do for the patrons, as well as the monthly Gold, Goats, and Guns investment newsletter, where or Dexter White and I take a hard look at whatever we think is the most important thing that month and projecting it forward in time and trying to build a portfolio strategy around that. So with that said, I'm out. You guys be well. You take care. We'll talk soon. And keep your slick on the ice.